Hello, it's Iino. I am pleased to present International Limited's Container Market Report for June 2023. I will provide detailed information on the North American job market and consumer spending, labor negotiations in North America, container prices, and other topics with figures. Let's get started. U.S. economy, job market doing very well, but outlook uncertain. On June 2, the U.S. Department of Labor released its May employment report, which showed that the number of non-farm payrolls increased by 339,000 from the previous month, exceeding market expectations of 190,000. The unemployment rate rose to 3.7% from 3.4% in April, while average hourly earnings rose 0.3% from the previous month. Compared to the same month last year, the increase was 4.3%. However, FRB, the Federal Reserve Board, expects the U.S. economy to enter a recessionary phase in the second half of the year. The reasons for this are as follows. Household savings from the U.S. government's cash transfer program for COVID-19 will bottom out, and consumer spending will decline. Financial institutions will be reluctant to extend loans due to the impact of bank failures. Companies will become more cautious about hiring. However, as seen in the IT industry, some industries are reducing their workforce in anticipation of declining demand, while small and medium-sized self-employed industries are unable to attract the workers they need even if they offer high wages. With that in mind, inflation is a powerful force that will drive up wages and move the chaotic post-COVID-19 U.S. economy in a healthy direction. Walmart, famous for its motto, "Everyday Low Price," reported an 8% increase in sales for the February-April period. Consumer spending, which accounts for 70% of the U.S. GDP, is moving robustly toward low prices and defending its lifestyle. At the same time, luxury purchases, dining out, and travel by wealthy Americans are on the rise, and sales of brand-name goods are also strong. For example, the U.S. market, which accounts for 20% of the total sales of French luxury brand Moët Louis Vuitton, which announced its financial results for the January-March 2023 period, showed an 8% increase over the previous year. However, the drop in demand for existing home sales, which accounts for about 90% of the U.S. housing market, due to the sharp increase in interest rates, has made the outlook for the U.S. economy uncertain. The Fed's high interest rate policy, which is 5.5%, is believed to have acted as a confluent agent against inflation to some extent. IATA, the International Air Transport Association, has announced that global air passenger demand in 2023 is expected to recover to 4.3 billion, 96% of the pre-COVID-19 2019 level. However, operating profit is expected to be 2.8%, which is not as high as 2019's 5.2%. The association also said that the high freight rates are largely due to higher labor costs. Container freight rates continue to decline. The following container freight rate indexes were released on June 1 by Drewry, a UK maritime consulting firm. Composite Index: $1,682 per FEU, year-on-year, minus 78%. Between Shanghai and Rotterdam, $1,543 per FEU, year-on-year, minus 84%. Between Shanghai and Los Angeles, $1,782 per FEU, year-on-year, minus 80%. Between Shanghai and New York, $2,833 per FEU, year-on-year, minus 74%. Drewry expects spot fares on east-west routes to decline further in the coming weeks. U.S. West Coast dock workers reached tentative agreement, but wage negotiations struggle. In April of this year, labor negotiations between ILWU and PMA almost reached a tentative agreement, but as of the 5th, several container terminals at U.S. West Coast ports continue to be closed. ILWU is requesting a $7.5 per hour wage increase each year for a contract validity period of 6 years. However, if this is done, wages are calculated to double in 6 years. PMA is now offering $1.56. According to PMA, wage increases over the past 20 years have ranged from $0.5 to $1.5 per hour. Currently, they have not been able to resolve this issue due to the wide range in hourly wage increases. PMA fears a return of the freight rate increases that occurred during the corona pandemic and is concerned that cargoes shifted to the east coast of North America due to congestions at the west coast will not return. Shippers groups are calling for political intervention against the Biden administration. New container prices for May 2023, questioning the prices offered by container manufacturers to leasing companies. The number of newly built containers in May was 166,372 TEU, and the new container factory balance was 1,004,140 TEU, up 32,092 TEU from last month. The major container manufacturers in China have had to lay off seasonal workers due to insufficient orders for new dry containers. As a result, they have had to shut down their dry container production lines and limit the number of dry containers they manufacture to make ends meet. New build prices have not been revealed this month, but it appears that container manufacturers are offering $2,300 per 20 feet to major leasing companies. This seems to send the wrong sign to leasing companies looking to make speculative purchases when container prices are low. China's steel market is sluggish. Will the change of LNG import destination contribute to the global economic recovery? Demand for construction, which accounts for more than half of China's steel products, has been sluggish, and the recovery in demand for real estate development has been slow. Chinese steelmakers are cutting production, but production levels remain considerably higher than domestic demand. Therefore, they are trying to stimulate demand in Asia, Japan and the rest of the world by lowering selling prices. However, the market is cooling down due to the economic slowdown caused by global monetary tightening, so expectations are low. China, the world's largest importer of natural resources, has switched its LNG imports from Australia to Russia and returned to domestically produced coal, leading to lower gas prices in Asia and Europe. China's imports have increased by more than 40%, as it has been able to purchase cheaper Russian gas, as a result of sanctions imposed on Russia by the developed countries. This may lead to lower global inflation, and contribute to a global economic recovery. Price adjustments and factory inventories of Chinese container makers. Chinese container manufacturers think that it would be better off following the traditional approach of adjusting container prices based on the supply-demand balance, now lowering production prices, and appealing to container leasing companies to offer prices that match the market. This will surely lead some aggressive container leasing companies to place speculative orders in anticipation of the container market in the coming year. It is said that 70% of the factory backlog, which currently exceeds 1 million TEU, is procured by shipping companies, with the remainder at 30%. These containers are for replacements for the shipping companies' fleets, which are over 10 years old. Thus, when the 24,000 TEU vessels are launched sequentially starting this year, the factory inventory will disappear in an instant, and sudden demand will emerge. As a result, shipping companies will have no choice but to rely on speculative new containers ordered by leasing companies. How was this containers market report? This was our first time collaborating with F International, and we think it is very interesting to see the container prices and Chinese container makers from a different perspective on the economy. Please check the link to F International's company website in the summary section. That is all for today. Thank you very much.
In this channel, I explain about international logistics knowledge for your better understanding. I hope this video will be a good support for your logistics job. If you have any shipment from Thailand or to Thailand, please feel free to contact me Iino-san anytime. Also, I'm very motivated to keep updating these videos. If you subscribe, press good or comment anything. Well, thank you. See you next time.